Good afternoon, this is Bob Iaccino talking metals from the CME Group trading floor in Chicago. Let's talk gold. Gold, with Italy's turmoil, got a bit of a safe haven bid, which isn't to say much. Gold finished right around 1,300 or down about 0.1%. So it wasn't much of a bid, although gold was down 0.5% early in the morning and recovered as talk of the Italy situation got a lot worse. Now, Italy has a transitory government in place. The president has seemed to lost confidence. There's no real structural problem, at least not a new structural problem with Italy. It's more of an emotional problem where the presidency has always been seen as sort of a source of stability, and there's been just rampant political aggression against this particular president and some of his appointments. So they're talking now about it being a transitory government with a new election coming probably within 6 months, possibly as early as July. And that's causing gold to get a little bit of a bid. But again, with the dollar rally we see, gold isn't able to rally as much as we've seen. The dollar index was driven higher mostly by the fall in the euro. It wasn't really an overall strong dollar performance as much as it was a fall in the euro. Euro dropped down to the low 115s today, almost breaking that 115 level versus the US dollar. That's where most of the volume was in the FX trade today. And again, the euro very much under pressure, continuing to sink, multiple sessions lower now in the euro, helping to push the dollar higher. We got lower rates in the US with the 10-year note hitting 280 just a while ago. We were talking about the potential for the 10-year note to hit 315. But now again, we're back below 3%, well below 3%, and most of that, again, dollar strength obviously not coming from lower treasury yields, coming from that strong fall in the euro. And then there's a situation with the Fed where you've got St. Louis Fed President Bullard talking about the Fed may need to back up a little bit because the Fed funds rate is pretty much at neutral now. And the probability of the rate hike in June are actually falling. You go back to about May 18th, May 19th, somewhere in that range, it was a 100% probability of a Fed rate hike in the June meeting. Then that actually went to a 95% chance of a 25 basis point rate hike and a 5% chance of a 50 basis point rate hike. As of today, the 50 basis point rate hike completely out of the Fed watch tool. We're down to about 78.6% probability of a 25 basis point rate hike, leaving that remaining 23% and change for no rate hike at all. So it seems like Bullard's words, along with the geopolitical tension, along with sort of the balancing act that the Fed has had to do with equity markets falling as much as they did today. And we're not only losing, we completely lost the possibility of a 50 basis point rate hike as per the Fed funds futures as registered at the CME Fed watch tool, but we've even lost close to 25% chance of the 25 basis point rate hike. All of this keeping sort of a floor under gold, but certainly has not been enough to rally gold substantially. This is Bob Iaccino from the CME Group trading floor in Chicago talking metals, specifically gold futures, which ended slightly lower today.